terms of market performance today, what did you make of it? Because we weren't as strong as we probably could have been given leads we saw from Wall Street.
Ingrid, that's exactly right. A little bit disappointing, I suppose, given the fact that we did see a lot of those US indices up over 1% overnight. So I think there might have been an expectation we would see a stronger day on the market today. But nonetheless, we have actually snapped those 2 previous days of losses. So certainly saw a little bit of relief there. Obviously, this morning we did follow those positive leads that we had coming from US and European markets. We had that strong private sector jobs data coming out of the US. Of course, that positive commentary coming from the Fed in terms of not hiring any interest rate rises, and of course coming out of the Eurozone there is now further pressure in terms of the ECB loosening their monetary policy. So all of that adding to that positive momentum, but it really was that energy sector that it does actually continue to weigh on the market. Once again, it was the worst performer, down another 0.7% today, continuing to see those oil prices really hovering at those low levels. On the flip side of it, we did see some of those high yielding and defensive sectors the best performers, so that property sector, telcos and financials as well. Materials was quite interesting. That actually closed up about 0.6% in the end, despite actually seeing some lower commodity prices through overnight. We saw iron ore dropping off slightly. As a result, we saw Mount Gibson, the worst performer in that materials sector, and also gold was off about 0.3%. And again, we saw some of those gold stocks really dragging, the likes of Northern Star and Evolution Mining. Volumes today, once again, were fairly light, about $3.4 billion going through in the end. In terms of economic data, it was very quiet in terms of corporate news, but we did have those building approvals through earlier, which actually beat expectations of a fall of about 3%, so coming in at a positive 7.5%. That provided a little bit of a boost to the market, and of course that Aussie dollar as well. But nonetheless, certainly nice to see some green across screen, but maybe a little bit disappointing we didn't see the similar gains to the US.
Yeah, and in terms of the energy space, you mentioned it before, of course, it continues to sort of drag. Do you expect lower oil prices to continue to be a theme? I mean, they don't seem to be going anywhere anytime soon.
No, you're right, Ingrid, and I do expect that they will continue to be a bit of a theme and certainly put pressure on the market. If we look at 2014, obviously we did see those falling commodity prices and the falling oil price really having an impact. The energy sector and the materials sector were both the worst performers, down about 15% or so over 2014. So I do certainly think that one of the themes in 2015, certainly in the early part of 2015, will in fact be those low oil prices and of course those falling commodity prices really continuing as well. Obviously the excess supply in the market I think really is having a big impact, particularly coming out of the likes of say Iraq and Russia, but also that weak demand, both having an impact, and I'm not sure that we will actually get any respite in that oil price, certainly in the early part of 2015 as I mentioned. So I do certainly think investors are probably taking more of a cautious stance at this stage and waiting for that oil price to find a bit of a floor. And until we do actually see some stabilisation in that oil price, I do think that we can continue to see a lot of those energy stocks coming under pressure. On the flip side of it, though, obviously we're seeing some of those airline stocks performing quite strongly, the likes of Qantas, which really is benefiting off those lower oil prices. So I do agree with you. I think it will be a continuing theme.
Yeah, and let's go back to Leanne. In terms of gold, of course, talks of US interest rate hikes likely to put pressure on gold, according to a lot of people. What's your view on that one?
Ingrid, I do agree. I think probably over the next 6 to 12 months or so we can expect to see lower gold prices coming through, particularly as the US does finally decide to increase those interest rates, despite obviously hearing overnight that they aren't in any hurry to increase those interest rates. But obviously talk about higher interest rates over in the US is going to continue to drive that US dollar stronger, and that obviously is a key driver of those gold prices as well. I think in the near term, as I mentioned, can certainly expect to see volatility and weakness potentially in that gold price. We have a forecast of about $1,150 an ounce, but I think if we look longer term, I think we're forecasting that potentially those gold prices might start to rebound again, and I think the government over in the US potentially will actually step in to control that stronger US dollar eventually, and might actually start to see some support in that gold price once again. But obviously that's taking a bit more of a longer term view. if we look at some of the ASX listed gold players, I think some of them are looking like they are in a fairly strong position. If we look at 2014, a lot of those equities were weaker by about 20 to 40% or so, and obviously as a result of the weakness and the volatility in those gold prices, but of course the overall weak sentiment towards the whole mining sector in general. So I think maybe coming into sort of the next 12 months or so, as I mentioned, some of them look like they're in a fairly strong position in terms of their balance sheets and some of their cash costs. We know a lot of them have been slashing their costs. So might actually start to see a bit of support coming into some of those gold stocks, and also there might be the likelihood of some further corporate activity in the space. But as I mentioned, near term, certainly over the next 12 months or so, I think we can expect some further weakness, but then beyond that might actually see a bit of a rebound once again.
Gold, Beadell Resources surging as well after a positive exploration update while we're on the gold space. What does it mean for the outlook there?
Look, I certainly think it looks fairly positive, Ingrid, and obviously saw a positive reaction today from investors. The stock closing up about 5.8% in the end, but some coming through today saying they've intersected quite a significant gold mineralisation at one of their gold mines, Duck Head. So that looked fairly positive, and as I said, saw a positive reaction. Potentially might actually affect the guidance for this stock. We saw a very disappointing first half result coming through for Beadell Resources. That was a result of some heavy rainfall at its Tucano mine over in Brazil, and that really put pressure on its sales as well as its revenues, and they also actually downgraded their full year guidance. But that obviously hasn't taken account of today's news and potential a cutback in that open pit mine. So we might actually potentially get an upgrade coming through further down the track. I think this stock obviously has been under a bit of pressure in terms of those gold prices as well, but I think over the next 12 months or so it should look a little bit more encouraging. I think the second half will see a drier half and potentially more productive. Maybe a dividend policy coming through in 2015 might actually help out as well, and of course any further exploration or drilling success such as what we have heard out today potentially will all support that share price. I also think that exploration coming out of that Tucano mine over the next 8 years or so should certainly look fairly strong, and we actually think it is one of the stronger pure play gold miners on the ASX. So I think the underlying fundamentals look fairly strong, and I think this news that came out today, I'm certainly seeing investors reacting positively and potentially will be positive long term as well.
All right, Leanne, we'll leave it there, but thanks a lot for joining us.
Thanks, Ingrid.